Good morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday to everybody, and hope everybody has a safe weekend. Certainly next week, temperatures here in the U.S. will turn extremely cold across the Midwest and all the way down into Florida. So we'll be kind of watching the impact that might have on logistics. I don't think we'll see the winter kill, but it depends on how much snow cover the area gets, and we may see actually temperatures colder than what is forecasted for the southern plains. As far as weather is concerned, we're also seeing continued dryness in Argentina and southern Brazil. The extended maps show some showers late next week in Argentina, so we'll see if that comes at just the right time for the markets. Europe, mostly dry. There's going to be a lot of snow in parts of Eastern Europe, parts of Russia, and Ukraine. And so we'll see what impact that has, not only on the war and logistics, but also harvesting 9 million tons of Ukrainian corn crop that's still in the fields. Overnight, the war escalated with heavy bombing of many Ukraine cities and infrastructure, and so again, that is not going away. Also, we're looking at delays in Russian vessel exports because of poor weather, inspection delays, but also the fact that insurers now no longer will offer war risk for vessels. We'll be also watching pretty closely the outside markets with the Fed chairman comments continue to weigh on U.S. stock markets. The fact that China could see more infections of COVID prior to their January 22nd New Year holiday could lower some of the imports of raw materials. Some feel that China may be close to being done buying U.S. beans if they take 98 million tons of imports. We also note that Beijing has become almost a ghost town, which also adds to uncertainty of how much raw materials they need down the road. U.S. Many analysts talking about a first quarter soft recession because of higher interest rates, and we'll see if that impacts the demand for domestic food and fuel. As far as the soybean prices yesterday, they dipped a little bit on concern about future demand for China and U.S. soybeans. The corn market's trying to find support from the dry Argentina weather and maybe slowdown of Black Sea exports, versus the fact that we're seeing a slower U.S. export and ethanol demand. We'll see if after January 1, the U.S. farmer wants to increase cash corn sales, with many forecasting lower fall 2023 prices. And the wheat market continues to bounce around depending upon just how much winter kill there's going to be, how much Russian exports are going to be slowed versus the demand, especially from North Africa and the Middle East. And we continue to see Matif wheat futures drop to the lowest prices that they have seen since the war started. So French prices are now almost equal to Russian prices, while U.S. hard wheat is still too expensive. Hope everybody has a good trading day, a good weekend as we get closer to the holidays and the end of this year.